Ladies and gentlemen, we have a massive news. It could turn out to be a positive for some areas of our markets, maybe Tesla because of energy, stuff like that. We'll get into it here in this video. But first and foremost, Trump has announced on Truth Social, quote, "We have completed our very first successful attack on the 3 nuclear sites in Iran, including Fordow, Natanz, and Esfahan. All planes are now outside of Iran airspace. A full payload of bombs was dropped on the primary site, Fordow. All planes are safely on their way home. Congratulations to our great American warriors. There is not another military in the world that could have done this. Now is the time for peace. Thank you for your attention to this matter." Now, the question that I really have at this point, and the one that's going to be most important, is were these bombs actually successful in taking out Iran's nuclear facilities? If they were not, if we don't detect some level of radiation, that becomes a larger issue. Then this would not be the first attack. This would be the first of maybe many, or God forbid, a boots on the ground kind of situation. Okay, we're gonna need more details on this. Maybe if this is just the one attack, it's done at this point. Maybe energy doesn't react as negative as some people are going to expect right after this news. Nonetheless, guys, we got a lot of other things to talk about, including Tesla. We have a video from Funstrats, Tom Lee, all kinds of things discussing this situation and what is next for markets. So let's go ahead and get into it. Now, here's some of the latest breaking news. It says a source in the U.S. familiar with the details said that Israel made it clear to the U.S. administration that it believes the 2-week window set by Trump is too long and that more urgent action is needed. But it is unclear whether this message was conveyed during the senior officials' conversation. This is from Israel Today. And again, in a phone call with the U.S., Israel officials said they could act on Iran's Fordow site before the end of Trump's 2-week deadline. Now, Iran's foreign minister says we can't negotiate with the U.S. while our people are being bombed. Now, this is very, I think, bad news. Iran's Atomic Energy Organization chief says following the Israeli regime's recent aggression, Iran's nuclear program will make progress at a faster pace and exponentially. So what is going on right now is Iran is racing towards a nuclear weapon, because if they get a nuclear weapon, then you basically have to stop bombing Iran, right? Or try to take it out inside of Iran. The threat would be that Iran could use this against Israel or the United States, although Iran doesn't have missiles that we know of that could hit the mainland U.S. There's really no good outcome to this, okay? This basically forces U.S. involvement. If Iran is going the opposite direction of what we have told them, that you cannot have a nuclear weapon, you cannot continue to enrich uranium, and they're saying, hey, we're going to speed up this process, I mean, that's not good. Even if Iran were to obtain a nuclear weapon, what good choice does Israel have in that? Or the United States, right? You gotta, take it out and potentially risk a nuke going off somewhere, okay? Or you stop all the aggression immediately and risk one day, getting Tel Aviv nuked. There's no good outcome when it comes to a nuclear weapon and Iran, and they're pushing things in the escalatory direction. And I think comments like this are going to be the reason why the U.S. gets involved. If you're racing for a nuclear weapon, that 2-week quote-unquote deadline, I don't think matters anymore, because Caroline Levitt even said over the past couple of days that Iran is still within weeks away from obtaining a nuclear weapon, and that's coming way too close to the wire. In the news, it says here, a U.S. strike on Iran may be launched soon based on Israeli-American discussions, according to the New York Times, citing Israeli officials. Also being reported that there was some kind of ground attack on the guards at Fordow. U.S. Secretary of State Rubio has told European allies the Trump admin's preferred choice with Iran is a diplomatic deal, but it does seem like we're getting further away from that. Initial reports are coming in that targeted airstrikes against Iranian naval vessels in the Persian Gulf by unidentified jets, a reporter on X said. Now, if you guys know anything about these B-2 stealth bombers, the fantastic, magnificent planes. I mean, these things are crazy. Okay, their payload is like 170,000 pounds. They're almost 200 feet wide. They're the big black ones. Okay, you've all seen them before. Well, they're stationed in the Diego Garcia Islands. Okay. Which is way south in the Indian Ocean. Okay. Now, if we were to launch a strike on Iran, it would likely happen from that location and probably travel somewhere in this kind of direction, right? And then hit the Fordo facility, which is obviously in Iran. Probably have a refueling by Qatar. And Israel today seemingly was taking out air defense systems and what could be naval assets in the path of where the B-2 bombers would fly. At least that is what, the speculation is as of right now. It seems like any moment the U.S. may be getting involved in this conflict. Politico says the movement of these B-2 bombers are not an indication directly that a strike is imminent. So, keep that in mind. I guess this has been happening since the Houthis, but more movement of these bombers definitely doesn't look great. And senior Iranian officials told Reuters that, quote, if we have to choose between stopping uranium enrichment and war, we choose war. I mean, there's no like other off ramp to this, right? If that's the choice, then war is the outcome. Now, from a market's perspective, this is obviously not great. It can have implications for, obviously, the energy market. Now, the main thing that matters is this Strait of Hormuz right here that Iran basically has control of, okay? 20 to 30% of the world's oil supply, at least coming out of this region of the Middle East, flows through the Strait of Hormuz, okay? If that were to be choked off, then you have a serious economic disaster or crisis on our hands. But just, attacking Iran would probably also trigger some level of oil price shock. And that has real economic impacts to the economy. Now, I think ultimately it's, conflict is an event you normally want to buy, right? It's a buying opportunity. But short term, it can be quite negative. And if the U.S. government does strike Iran over any point in this weekend, I would expect markets are probably going to be down quite a bit on Monday. Now, for Tesla stock specifically, it gets kind of interesting because if oil prices do spike a lot, then that could push people to look into EVs, and that could actually be a positive catalyst for Tesla. But we'll have to just wait and see, obviously, if that's the direction that Tesla stock wants to take this. It could be a little bit of like a hedge and hiding out opportunity as well, since we are starting operations of the robotaxi on Sunday, and then all the other questions with that start to come about, like how fast does it scale? What are the numbers going to look like in the coming years? How does this change the valuation for Tesla? It's one thing to talk about robotaxis, to talk a big game, but to actually do it is something completely different. And we start doing it on Sunday. Now, take a listen to this clip from Tom Lee. I think breaks down a lot of the key important topics in markets pretty well, and I would say I agree with pretty much everything he says.
Let's now bring in Fundstrat's head of research and Fundstrat Capital CIO Tom Lee, along with Wells Fargo's head of equity strategy Chris Harvey. Tom's a CNBC contributor. You also make the argument that all this concern over inflation related to tariffs is too aggressive and overdone.
That's right. So what you hear is, here's what should be happening. Prices should be going higher. You hear that from economists. You hear that from the Fed. You hear that there's a lag. What we look at is what's actually happening. And what companies are saying is, we see tariffs. We're going to mitigate them to the best of our ability, and they are. Right? If you look at Costco, what is Costco saying? We're not going to raise prices on a lot of that day-to-day stuff. We'll raise it on discretionary. We'll keep the basket under control, and we're really not going to push along inflation. And that's what's happening. So this whole belief that we're going to see this inflation shock, I don't think it's really well-founded. If you're looking at the data, if you look at what companies are doing right here, right now, and what you expect them to do, inflation is not going to be a problem.
I think, Tom, you agree with that, don't you?
I do. One of the things that I think helps is if you go to the May CPI report, core inflation was 0.13% month over month. The goods component was in deflation, which is affected by tariffs. And then if you look at core, the two biggest contributors were housing and auto insurance. That was 0.14. So outside of housing and auto insurance, we had deflation in the May CPI report. I don't think tariffs are going to cause housing prices to go up, nor is it going to cause auto insurance. So to me, the Fed is, I think, shifting to looking at expected tariffs, but not realizing the real driver of inflation. 75% of inflation since 2019 was housing and auto insurance. Those are both actually starting to cool.
So are we all, not we, you, three, all suggesting that the Fed, I think the professor already said as much, that the Fed should cut rates in July? Harvey, you first. This sounds like yes.
So what the Fed has said, which I agree with, the Fed's saying, hey, the economy's still strong. We still have time to take a wait-and-see approach. It's in our best interest to do that. And I don't think they're going to move in July. I don't think they should move in July, but I do think later this year.
You don't think they should move in July?
No, I think they can take their time. I think they can take another meeting or so, let the data come in, convince themselves of what they need to convince them of, and then we'll normalize later in the year. And then we can all just move forward.
So, Tom, do you agree with that? I mean, you agree that Waller might be jumping the gun here with calls for July?
I think if we looked at the Fed's framework that they've repeated in statements over the last 8 meetings about data dependence, then they should have cut, or they should be cutting in July. So I think this last meeting seemed to have changed the guideposts from data dependence to forward-looking expectations around tariff inflation that I think is why markets are starting to question the Fed's rationale. And Professor Siegel points it out, long-term inflation expectations are lower today for 1 year forward than they were in December. So we've gone through a full tariff liberation day and expected inflation's lower. Yields are actually lower. I think the market is moving ahead of the Fed and saying the Fed should be cutting sooner.
So at what point is the market going to get, Tom, too upset by the pace that appears to be slower than it would like?
Well, there could be an accident, right? Because I think what we are ignoring is housing is choking and collapsing under the weight of higher interest rates. And the labor market isn't as strong as it appears. I mean, when we look at the ability to get a job, it's much harder. So as Professor Siegel says, there's long and variable lags. There could be an accident where the Fed will have to panic. So I think that's something we have to watch in the incoming data.
When you say accident, what do you mean? On the long end of the curve, like rates go up too much? What do you mean?
No, I think that there could be a point where the Fed suddenly realizes the risks are actually to the downside for the economy weakening. And so the Fed will actually have to respond to an economy that they're strangulating and really fighting what they believe is a supply shock inflation. So I'm a little concerned that the Fed could be late if they continue to hold.
Adds to the uncertainty, the Fed's roadmap and the Middle East, you throw that into the mix too. We're not really sure what's going to happen there. What's your best idea now in light of all that?
Best idea is still AI. AI has run, but it's still, if you're looking 12, 24, 36 months out, it's still that AI trade. This is not like the late 90s. The player's not like the late 90s. The opportunity's not like the late 90s. This has legs. The AI diffusion, the Mitigation of AI Diffusion Act has given it legs, and we will continue to see AI. That is the U.S. secular robust trade. That is the trade that you need to be in if you're not in already.
Tom, you guys sound like you're sharing research.
Mm-hmm. Yeah. I mean, I broadly agree. I might add that I think interest-sensitive groups are going to benefit because they're going to start to look forward and realize the Fed, if they are a little slower this year, they're going to be more dovish next year. That's good for financials. It is good for the industrials. really good for Bitcoin and small caps as well.
Professor, when you look at the tech trade, do you feel like the stocks are overvalued, or do you believe Harvey, which says, no, they're giving you every reason and they keep telling you and proving to you, including in the most recent earnings season, exactly why money should still go to those stocks?
Well, AI is very important, and certainly those companies, I think, will continue to prosper. But let's not forget about the AI users. And I think it's in the infancy of use to cut costs by regular firms that are not in technology. And I think in some ways tariffs might be one of the things that pushes them to more intensively use AI to cut costs. We saw during the pandemic, all of a sudden, people use Zooms. They saw, well, I don't have to have a business meeting, in Chicago or someplace around the world. We could use other technologies that did cut costs at that time. And so the users could benefit in the future as much as the producers in the AI technology space. So, I'm very optimistic about firms implementing AI to cut costs, maintain margins, or even maybe expand them despite the tariffs.
Are we going to be okay, Chris, this next earnings season? We were better than expected in the last one.
Right.
And I don't know what's going to be in the next one, but what about this one that's coming up after the second quarter earnings?
I think so. Everything we're seeing from the consumer is still okay. You're seeing some weakness, but not a ton. CapEx still really strong. The shock from April really hasn't affected things all that much. I think if you have that weakness, but we get some progress on trade and tariff, people will look through it. But if you're asking the question, are numbers going to be solid? Numbers will be solid.
Yeah. Tom, you agree with that?
I do. I think companies have proven many times over the last 5 years that they are incredibly resilient and adaptive. This is really the fifth shock that they've absorbed. I do think one of the consequences of sort of surviving COVID and fastest hikes in history and now this tariff shock is that investors are going to start to assign higher multiples to the companies that are succeeding. So I do think PE expansion is a theme we should think about the next 12 months.
All right, we'll leave it there, everybody. Good weekend to all. Professor, thank you as usual. And Tom and Chris, we'll see you again soon.
So let me know what you guys think about all of this down below in the comment section. I know it's just way too uncertain here on a Saturday afternoon to say what the path ahead is going to for sure be for markets. It really just depends what happens over this weekend, if negotiations continue, or if this is seen as kind of the red line where Iran wants to continue to enrich uranium. We obviously say they cannot do that. Is that just because they're being attacked and they're being bombed? Or is that really their hard line? Is that their bottom line? They would rather go to war. And if that's the case, what implications does it have for energy? And then Tesla with the robotaxi launching on Sunday, that ought to be a positive catalyst for Tesla. Higher energy prices could be a positive catalyst for Tesla. So unfortunately, at this point, it doesn't look great. But there could also be a positive off-ramp for Tesla stock specifically. So let me know your thoughts on all of this down below in the comment section. Ladies and gentlemen, if you guys want to come trade with us, check out that link down below in the description of this video as well. We are finding hidden gems, your smaller cap companies that are underlooked. Nobody's even paying attention to them. A lot of them in biopharma right now, and some of them in AI. We have a pretty great track record at doing this. It takes a lot of work. There's a lot of shit companies out there, but you can find ones that are really standout opportunities. And that is what we do in that community. If you guys want to come join it, again, link down below in the description of this video. You guys have a great rest of your day, and I will see you in the next one.